My name is Varun Karnanantham. I'm here from Iconic Mortgages. We are going to do something different today with Chris. So it's called Mortgage Minute. Thank you for being my host.
Of course, no problem. I thought that maybe we can do something a little bit different this time, where we're kind of just going back and forth on things that are happening in the market at the current time.
There's a lot of things happening.
There's a lot happening, especially just recently a report coming out saying it's like the slowest month or slowest June in how many years, like over a decade.
Correct.
So there's a lot happening. I thought we can kind of just like bring the ball back for people that don't understand like how all this kind of works. If I do have a variable right now, am I paying less now because of rates have gone down, or how does that work?
Okay, it depends on the lender to lender, right? Some lenders actually do drop the payment, and some lenders don't drop the payment. What they do is what goes between the fixed principal and interest will differentiate.
Okay. And is there like certain lenders that...
The lenders who drop the payments in the major banks are National Bank and Scotiabank.
Okay.
TD, BMO, they just allocation will be different between the principal and interest.
So you end up paying more into your principal than into your...
Correct.
Okay. And if you get into that situation, let's say they cut it again a couple more times, and let's say it's a % difference now, are you able to go to your bank, let's say you're with TD, and work with them to get that lower rate on variable? Some lenders,
for example, you brought up TD. TD do drop the payment if you call them in.
Okay.
Some banks do not drop the payment.
Yeah.
But at that point, maybe you can reevaluate and say, hey, is it time to fix my mortgage or not?
Yeah. Okay.
It's like gas prices. You don't know what's going to be tomorrow.
Exactly. It's always changing and fluctuating.
Always fluctuating. I always say the bond yields are like a gas pricing. Like I will be sending a pricing request for a client today at 4.99. The next day will be 5.09.
Oh, really?
It's fluctuate. It's literally fluctuate like a gas prices.
That's crazy. So like in terms of like how much of a difference this can possibly make on a mortgage payment, let's say someone has $1 million mortgage with a bank, how much of a difference would like a 0.25 change make in it?
If I'm not mistaken, I think every $100,000, I think is make a $15 difference. On the
$15?
$15 difference.
Okay.
Yeah.
Oh, that can be big for some people.
It can add up. It depends on the size of the mortgage.
Yeah, especially if you have like multiple properties.
Yeah. Correct.
When we look at rates for like the rest of the year, what do you think will happen? I know there was different predictions at the beginning of the year, obviously.
I think it's really hard to say. It all comes down to inflation and the employment numbers, right? If they are trending in a direction what they're predicting a rate prime to be about 4% by end of the year.
Okay.
So that's mean the fixed rates will be coming down as well.
Yeah.
I'm not too sure what that's going to be in terms of the house prices or affordability, but keep in mind, it's still majority of the mortgages are coming up for renewal.
Yeah.
And they are going to be renewing almost 100% more than what the existing payment was.
Yeah.
If someone is at 2.5, they're still renewing at 4.5.
Yeah. Which is a huge difference, especially for your lifestyle.
Right. So I don't know what that's going to mean for the transaction and the prices and the affordability.
Yeah. And even with like talking about that, like everyone's reporting right now that there's this huge mortgage cliff that we're coming up on. Like obviously you mentioning that, you must be seeing it as well.
I'm seeing it already. Like the clients we put in 1 to 2%, they're coming at 4.5, high 4s to mid 5s, even on a fixed rate mortgages.
Yeah. And are you
That's
seeing...
a payment shock, right?
It is a payment shock. Like, and especially if someone's like their income hasn't shifted at all, but they have like increase in groceries, increase in gas, increase in everything.
On top of that, you had to deal with this. So in my opinion, people who had a variable rate mortgage, they were prepared a couple of years back because they dealt with this.
Yeah.
And people took a variable rate mortgage 2 years back, they're going to see the payment decreases because rates are going to be coming down.
Yeah.
Who's going to see the shock is the people, the clients who had a mortgage on a fixed rate mortgages at 5-year term that's coming up for renewal. They haven't seen the payment shock yet.
Yeah. And it's going to be interesting to see how they're able to deal with it.
Correct.
Yeah.
And I'm also having a tough time requalifying them again to move to the lender or even to do a refinance because it was already a stretch 5 years back.
Okay.
So they might have to end up staying with the existing lender.
Yeah. Are you seeing a lot of people that, let's say theirs is coming up in like a year or 2 years, are they getting ahead of it right now, or Who's contacting you?
Some
right
people
now?
are. At the end of the day, it's come down to cash flow,
Yeah.
right? The higher the interest rate is going to be impact your cash flow. What that leads to how are you going to manage your debts, overall debts. Maybe it's a time to add additional income, maybe rent your basement out. Some of them are calling to see if they can do a refinance to fix up the basement so they can rent it out, or maybe new job or part-time job, or consolidate your debts to have a better cash flow. At the end of the day, you need to have a better cash flow to keep up these payments. That's what it comes down to.
Okay. And you're seeing a lot of people doing that proactively, or like people trying to just like grasp onto it and make it work with what they have?
I think it depends. Some clients are very proactive, and some clients are will deal with it. We still got 6 months. Let's ride this out.
Okay.
And we'll deal with it. Hopefully, the rates will be down by the time it comes down to renewal.
Yeah.
But it's not going to be closer to what they have.
Yeah. So
it's a fast stretch.
Some are just playing that waiting game, trying to do it, and then there's others that are actually proactive doing things right now.
Correct.
How would you say, like, how would you recommend to someone to deal with it? If, let's say, in 6-12 months they have a mortgage renewal coming up, what would you suggest to them?
My suggestion will be do your budgeting.
Okay.
Like, look at the payment, what is going to be in 6 months, 12 months from now. Look at your overall household income. Look at your overall debts. Like, don't disqualify your small line of credit or a credit card or a car loan. Do your budget.
Yeah.
And look at how much your monthly payment has gone up, or going to be going up compared to what was it before.
Yeah.
And if you think the cash flow is going to be a problem, talk to your professional. See what you can do to do a cash flow management.
Yeah.
That would be my advice.
And if they can't afford it, let's say, like, is their only option to sell, or is there some creative ways to get around it?
If you can afford, you can afford.
Yeah.
Maybe you can look into create additional income, maybe rent out the basement. If you have a finished basement, rent out the basement. Or if you have a lot of equity in your home, 6 to 12 months is a good time frame. Maybe you can add a basement apartment. It's going to cost you $30,000, $40,000, $50,000. Maybe that's going to give you extra $1,000, $2,000 in income. Even if you pull some equity out, you can still keep up the payment.
Yeah.
Or your mortgage is coming up for renewal. You're on a 20-year amortization. Maybe you want a better cash flow. Talk to your lender, talk to your broker, talk to your bank, and see if you can go from 20 to 30 years to have a better cash flow. Or you may need a part-time job.
Yeah.
Or you may want to look at selling the property. So you have to do what's right for everyone. Is in a unique situation.
Yeah.
I had a client who called me. He had a first mortgage and a second mortgage coming up for renewal. I told him, listen, your monthly, it doesn't matter what you do, your monthly income is going to be $6,000, $6,500. Just your mortgage payment alone, it doesn't matter what I do to help you out, is $7,000. Your numbers do not make sense. Can I help him to get the financing? Absolutely. Am I doing the right thing for the client? I know he's going to be selling the house in 3 to 6 months. I don't want to put him through the hoops of paying all these fees. So talk to your trusted advisor who's going to give you the honest advice.
Yeah.
That's important, because it's not about getting through for 6 months and deal with it after 6 months. It can be more impactful if we don't deal with the problem. So if you have a problem, go to the doctor right away and get the bottom of it. And same thing, if you have a financial problem, deal with it right then and there, because it's going to be snowballing effect.
Yeah. Don't just like ignore it.
Don't borrow from Peter to pay Paul. I see that happens a lot.
Yeah.
Taking from credit card to pay this credit card, and then everything's going to come and just tangle your neck.
And are you seeing that a lot now?
Yeah, I'm seeing quite a bit.
Yeah.
I'm seeing quite a bit. Some people can get through it. I have seen people taking the money from credit card to keep up the mortgage payment.
Oh, wow.
Yeah. And I've seen people pawning jewelries to make a credit card payment.
Yeah.
I mean, mortgage payment.
Wow. That's crazy.
Yeah. So these are signs of trouble.
Yeah. And were you seeing this like a year ago, or is it different now?
You know what? You get through it. You use your savings. You get some help from the family. These are the last resources before you scratch your surface.
Yeah.
If you talk to a proper advisor, they would have told you how to deal with it. But sometimes you have to swallow the ego and deal with the problem.
Yeah.
It's okay to walk away with the equity you have, rather than ruin your credit and reestablish yourself once you're ready, than just hitting the wall.
Yeah.
Then you have to lose your property at someone else's terms, not in your terms.
Yeah, I guess at the end of the day, it is like a big ego play that you're having. People don't want to be seen by others as like they had to sell that property, they had to get into something smaller, they had to move in with their parents. Like it's
And
more or
also,
less,
it's a quality of life as well, right?
Yeah, exactly.
So you are really, like if you are picking up the second job or you're doing overtime, you're still sacrificing your quality of life as well.
Yeah, you don't have that extra time to
You don't
just
have the extra
do
time.
what you want.
Yeah, and it's a summer.
Yeah, exactly. It's a summer too.
You had to wait for another 12 months to see this weather.
Yeah. Jeez. With like all these, like with the way that the rates and the renewals are coming up right now, there's been people talking about the government should step in to do something about it. And one of the things that I've heard is they should allow 40-year amortizations on mortgages for only people that are renewing their mortgage. Have you heard about this, or do you think there's anything the government should be doing?
Honestly, I haven't heard a lot about that.
Yeah.
And I don't think so that's going to happen. Maybe they will work in the back ends to keep the payments flowing rather than get them to sell it. Maybe they're working with the lenders. Just on the renewals, honestly, I haven't heard anything about it. But I think 40 years is going to be a bit of a stretch for the government to come up with.
Yeah.
Think so, if you're 40, you're going to pay till 80.
Yeah, fair.
And you are retirement at 65.
Mm-hmm.
You really have to think about it.
Yeah. It just doesn't really add up.
It really doesn't add up.
Yeah. But do you think there's anything else that they can possibly do, or you think they should just let it kind of work the way it is?
I think they may probably work with the existing borrowers, make sure they don't lose the property.
Yeah.
They may work through it. But I don't think so. It will be for the new borrowers, because you don't want the existing borrowers to come out and lose the property. This is going to be pretty messy.
Yeah.
So banks may work the way to keep the payments going.
Mm-hmm. Okay. And then just moving, like, to tie this up a little bit, if someone's looking, they're in a situation where they need to renew, obviously, they have their mortgage coming up in a couple of years or maybe in a couple months, what's one way that they can find out who's the best mortgage broker to work with? What are some red flags that they should look out for?
First of all, don't sign the document that you get from your lender, the current lender or the bank who you deal with. They want to give you they're not going to give you the best option what's out there. Mm-hmm. So I will say talk to your mortgage broker, because as a mortgage broker, we have access to many, many lenders. And every single time, every lender has a different rate and a product that may be the best suitable for you. So you may have a mortgage with a major bank and you may want to do a refinance, to do a debt consolidation. You may not qualify with the same bank, but talking to a mortgage agent, we have access to many lenders. Even though you may have to go with the alternate lenders, but you can have a better cash flow management.
Yeah.
So, in my opinion, you may have to go to B lender or the alternate lender, but you have a better cash flow. I will rather move to the alternate lenders, and I know I can afford this payment and keep the property, rather than not the bank say no. You end up in selling the property. So, explore the options.
Okay. And the best way to explore options is working with a broker.
Working with a mortgage agent.
Agent, okay.
Because we have access to many lenders than talking to one single lender at the bank.
Is there any benefit to going straight to a bank?
Banks has their own criteria, and if you don't fit it, you don't qualify.
Okay.
And whatever the rate they give is the same rate. Like I'm seeing anywhere from 25 to 50 points different from lender to lender.
Oh, really?
Right? You could be a AAA client. You don't have any problem renewing it, but you can get 50 points off by talking to a mortgage agent.
Yeah.
Than your own bank.
Yeah. I remembered when I first got my mortgage on my condo, that was our first move. We went to the bank that we do our banking with, and we met with a mortgage agent, I guess.
Mortgage specialist.
Mortgage specialist. And when we went in, we were prepared. We had like all our documents ready that they said to bring in online, everything. Yep. And we sat down to talk to them. And within like 5 minutes of us talking to them, he was like, "Oh, you're self-employed? Yeah, well, you can't give you a mortgage." And I was like, this is wild. Like, am I not going to be able to buy a property because I'm self-employed and I don't work somewhere? Yeah. So like that was my first time ever seeing how much like that can affect you, like going to just one bank, working with one person who has one set of criteria versus going to a mortgage broker agent that's able to kind of look at what you have and help you explore all the possible. Yeah, exactly. Find a solution that works for you. Okay. So like now we know what you would say is like the best route to take.
Yeah.
When exploring different mortgage agents and mortgage brokers and who you can work with, what's a red flag that you would, or a couple red flags that someone can quickly identify, like I shouldn't be working with them? Or even as like a real estate agent, what should you be looking at?
I don't want to knock my peers out there. You have to do your research, work through your referrals, Google them. Google is the best way to find things out. Okay. And it's better to go and talk to your peers and your colleagues and say, give some recommendation. This is a very financial sensitive and emotional sensitive and a life sensitive thing. So work with someone who do you know. The best, if you don't know a mortgage agent, talk to someone and ask him to recommend someone.
Okay.
Or if not, just call me.
Yeah, just call you. That's what I did.
I would say just get the recommendation from your friends and family.
Yeah.
From their mortgage professional they have relationship with.
Okay. And as a realtor working with or trying to find a different mortgage agent to partner with, what are some red flags that they can look out for?
As a realtor, you got to make sure you're working with a full-time mortgage agent who has an infrastructure to help your clients, because clients are putting an offer middle of the night, they need a backup and all those things. So you want to make sure you are dealing with a mortgage agent who has infrastructure and who's available at your need. Because there's a lot of part-time mortgage agents. Nothing wrong with that, but make sure they have infrastructure behind them. You know what? Nothing wrong being a part-time agent. Like I have a lot of colleagues, they are part-time, they do a great job, but they are part of the organization where they have an infrastructure to support them. So that's mean the service level is being not dropped. As a realtor, it's very important because when you recommend someone who you trust, when they drop the service level, it's impact on you as well.
Yeah.
And make sure they have access to all the lenders. That's the most important thing. Not every single mortgage brokerage or every single mortgage agent do have access to all the lenders. So you want to make sure they have access to the lenders and they have a relationship with the lenders they work with.
Okay, Vern. So to wrap up our mortgage minute, if you were put in a situation where you had 6 to 12 months to renew your mortgage, and you were put into a situation where you had to make a decision, would you be choosing fixed rate or variable rate?
It's a very tricky one. I'm having this conversation with the clients on a daily basis. It comes down to your risk tolerance, and also it's come down to your cash flow. If you are in a financial position that you can take a little bit of a risk for an opportunity cost, I think it's just come down to the opportunity cost, and can manage the payment for next 6 to 12 months, knowing where the economy is trending and where the rates are going to be, I will recommend a variable. If you're on an absolute budget and you have zero risk tolerance, you're a GIC person or a mutual fund person, I will say take the fixed.
Okay.
Because the payments are lower and you know this is a payment for next 3 to 5 years. It depends on every individual.
Yeah.
If you ask me personally, I will go into the variable.
Okay. Because you're more risky.
I guess. Anything else, Chris?
No, that's all I got today. Thanks everyone for joining us on the Mortgage Minute.
Perfect. Thank you for being my host. And if you want to learn more, Varen knows mortgages. You know where to reach me. 905-999-7193. Thank you.